Hello everyone, my name is Sunday. You are welcome to Against FX. All right, today is another beautiful day. Any month from now, forex market will open. All right, as we all know, forex market opens Friday around 11, Sunday around 11 p.m. and it runs 24 hours, 5 days a week. That means from Sunday night till Friday evening. So around the clock like that. So usually what we do is we carry out our technical analysis using a method we call top-down analysis. So if you are new to my channel, please do well to subscribe. All you need to do is go to Against FX, go to your YouTube, type Against FX. Then it will open, then you just click subscribe. Now, where will you find all these weekly analysis that we do carry out? You go to the playlist. Once you click on the playlist, you will see market moves. All right, you see market moves. Market moves. Once you click on market moves, you see all those technical analysis. I'll see all this weekly technical analysis that we do carry out. Everything is there. All right, and again, I want to still use this medium to let you guys know that I'm offering a 1 month free course for beginners. If you have interest in learning, if you have interest and you want to be a forex trader and you don't know how, this is an avenue for you to key in to this this program. All right, throughout this month, I've already started, and I have a lot of video, and that you will find, or when you go to my playlist, you'll find all those videos on all the teachings from beginners free course. You just go to the playlist, you click on the playlist, you see beginners free course. So every videos, all of the videos that I've released so far to help you get started, and as we are progressing, every other videos will be uploaded there. So you get there, click on that beginners free course, then you see all the videos available there. You are not paying for anything. The only thing you need to do is just subscribe to my channel. That's all. This is what people charge thousands of dollars, not even in naira, thousands of dollars to teach. But I am just giving it out as a way of helping the masses. All right. I know things are difficult, most especially our brothers and our sisters that lives in Nigeria or Africa. Please, this is an avenue for you to key in to this program. Trading is not that easy, but I tell you, once you focus on the process, all right, the goal will surely surface in due time. Focus on the process. You must learn first. After you have learned, then you now start practicing what you have learned. And apart from that, any topic that I've made video on, and you want to have a deep dive, you just go to ChatGPT, then ask questions. ChatGPT, the AI, will respond to you, will give you every other information that you need. Like I said, I'm offering this course for free so that I can help you build your foundation. Lay a foundation for you to now start, you know, to progress. So before the end of this month, all right, before the end of month of September, if you have been following my video, I bet you will start trading by yourself. All right, and don't forget, if you have any question, you drop your question at the comment section. Please do help to share, because there are people out there that needs assistance. All right, they want to become something, they don't know how to start. They want to become traders, forex trader, but they don't know how to go about it. This is a free course. Please do help share this video so that others can see it. All right, so without wasting much time, today we are going to be, you know, doing our top-down technical analysis as regards to the market. All right, because anywhere from now, the market will open. Like I said, market opens on Sunday around 11 p.m. So let's start. Okay. The first thing we need to do is we start from the monthly time frame. All right, I've listed it so that even you can always do it yourself. Does not necessarily mean that you have to wait for me every Sunday. As far as you know what you are doing, you can always do it yourself. All right, so, and if you want any validation, you can do your analysis, send it to me. I will look at it and tell you, okay, if there are errors, I'll let you know. And if you are good to go, if everything is right, I'll just tell you, okay, guys, thumbs up, everything is okay. So let's communicate, okay? So the first thing we need to do is to start from the monthly time frame. Why do we need to start from the monthly time frame? So that we will know the overall direction of the trend. All right, we want to know the overall direction of the trend. So we'll click on M, that is monthly time frame. As far as I'm concerned, at this point, now that we have clicked on M, we know that we are on monthly time frame. All right, so we are monthly time frame. We can now see that price has been making its way down. All right, making its way to the downside. You can now see making its way to the downside, but something strange happened after this last break of structure here. After this last break of structure, something happened. All right, break of structure. Guys, by now, you'll be following me, you understand why this is break of structure. All right, because this price pulled down. This is the lower low that we have here. So this price here is higher than this. So there is a break of structure here. So after this break of structure, price created this low. All right. And what happened? Price pulled back. All right. Created a resistance here. Price created a resistance here. Price created a resistance here. Right? Price created a resistance here, just like the way price created a resistance here. All right. Also, price created a resistance here. All right. And this one too is a resistance. All right. So when price creates a resistance, the next point, once it push to the downside, is going to create what we call support. So I don't need to start marking it so that we will not rubbish the chart. Okay, so I'm just showing you so that you will understand what I am saying. All right, price created a resistance. This is the last resistance price created after this break of structure. After this break of structure to the downside. All right. Price now pull back, created a resistance. Now, the order flow simply means price after the creation of this resistance is supposed to pull back to give us another lower price. But what happens? Price stopped here, all right? Then price stopped here, then reversed and violated this resistance. So once that happened, guys, you know by now, once that happens, we will now say change of character. All right, the resistance has now been violated. That means change of character has occurred. All right, change of character has occurred. Change of character or market shift has occurred. All right, because the order flow price after price has created a resistance is supposed to push to the downside, violating this support level, giving us a new low. But it didn't do that. Otherwise, price now turned from here, it stopped shy, all right? Then it now push above the resistance. Then we now say market shift or change of character. All right, you can say market shift or change of character. It then means that price is preparing to start pushing to the upside. So we have been able to identify that after this last break of structure, price has given us a market shift. All right, so we have identified that. Now, what we need to do right now is for us to scale down to weekly and daily time frame to identify and mark our valid support and resistance level. So we scale down to weekly. Let's see what is going on. All right, let's scale down to weekly and see what is actually going on. All right, we are going to reset the chart. Okay, this is where we marked. So after this monthly change of character, what happened? Price pullback. You can see from the weekly point of view, price now pull back, breaking structure to the upside. So let's read the weekly chart. Let's read the weekly chart so that we understand what we are doing. So the weekly chart, if you look at the weekly chart, you now discover that this leg, all right, you see, after push to the upside, breaking structure to the upside, like this, okay, then there's a pullback. Pullback giving us, the pullback giving us a support here, giving us a support level here, and a break of structure here. So you can now see that the monthly is the bigger trend. The weekly is embedded in the monthly trend. You can see this is it. But the actual trend is the monthly trend. All right? This is the bigger picture. If you want to now compare the monthly and the weekly, you discover that the weekly is the smaller picture, the smaller trend inside the monthly trend. The monthly time frame is the bigger picture. So we are going to read the weekly time frame, you can now see break of structure here, break of structure here, break of structure like this. All right, so we don't need to start marking all those things, but we have spotted the what do you call it, the support level, another support level here, because why? We have the other block here. We have the other block here, and this other block has been mitigated. You see, it created another block after pullback. It created another block, but it now pushed to the downside, interacted with this. So this other block is no longer valid. It has been mitigated. All right, it has been mitigated. It has been mitigated. Mitigated in the sense that this push has covered this level. All right, you see this one, there's a gap between here and here. So this is an FVG, fair value gap. This one here is an FVG. Why is it an FVG? Because there's a gap between this low. Let me mark it so that you guys can understand. There's a gap between this low, the low of this candle, and the high of this candle. This part here is what we call fair value gap. This is imbalance. You can call it imbalance, price that is not balanced, because price cannot just push to the upside like this and leaving this gap. So it's FVG. In trading, we call it FVG or fair value gap. FVG, that is fair value gap. FVG, all right? With FVG, or you call it imbalance, all right? And what caused this push to the upside is this other block here, all right? Is this other block. This is the other block. And if you look at it, this is the weekly, week one other block, week one OB. All right. If we scale down, now you discover that this part here is this level is too long. All right. It's too long of a position where you have to wait for price. But this is the right thing to do if you want to be really profitable. All right. The ability to wait for price, the ability to wait for price so that price will come to you before you act. All right. Now, this is the other block from the weekly time frame. All right. This is the other block from the weekly time frame. Let's remove this particular one. All right. This was the from the weekly time frame. This was the support level. All right. So we are not going to. The next thing we need to do is to scale down to the daily time frame. All right. The weekly, now we have identified the point, and we now need to scale down to the daily time frame. What are we doing? We are doing top-down analysis. And guys, this is how to refine also your order block. Now you discover that this is what the weekly order block. You can see this high here where this 2 is, with up to this point. All right, if you have to enter, you pick your buy 2 here, place the open. If you put your this thing here, your stop loss will be below this structure, right? Below this structure. Now, when you look at it, you discover that the space between this level and this level is too wide of a stop loss. All right? It's too wide of a stop loss. All right? That is why we refine order block. All right? That's why we refine order block. What do you mean by refining order block? If you scale down now from this weekly, this is the weekly order block. All right? This is the gap between here and here, because you have to put your stop loss below this structure, below this order block. So the gap will be too big. All right? So when you now scale down to daily, when you now scale, I'm doing analysis and at the same time I'm teaching you guys. When you now scale down to daily, you still see it that, okay, it's still wide, all right? The gap is still wide. You want to refine it. All you need to do is, this is the guy that caused this push to the upside. Now that you have refined it, you now discover that the gap is just between here. We now want to enter, place your entry. The gap will now be small. All right? So your stop loss pips will now be small. Okay, let's say, for example, it was here before. All right, your stop loss, from the weekly point of view, your stop loss supposed to be here. All right, when you look at your stop loss, you discover that your stop loss pips is what? 228 pips. But when you scale down to daily and you refine your order block, all right, you refine your order block, because this candle here, this bearish candle here, it can be bullish, all right? This last candle here is what triggered this buy, this move. That is why it is called order block, all right? This is where institutions place their order before they now push price to the upside. Now that this order block is here, you have now refined it from weekly, you now drop down to daily, you have refined the order block. That is the high of this candle to the low of this candle. You shade it, all right? You shade it. Then when you now pick your buy tool, this is a buy tool, you now discover that, because you cannot just place your stop loss immediately or beneath this order block. You have to give it a little room. Now, a little room. From 220 pips, we've been able to refine it to what? 105 pips. All right? 105 pips. It has not ended. All right? Now you want to refine again. Then you now scale down to 4 hours. Scale down to 4 hours. You scale down to 4 hours. By the time you now scale down to 4 hours, you look so that you see where the order block is on the 4-hour time frame. So you can now see the 4-hour time frame. The order block is just simply this. All right? The order block of this 4 hours is just this, between here to this point. All right? So if you are to adjust your, what do you call it? This your tool, you now discover that from here to this point, all right, if this point, from here to this point, how many stop loss pips now? Look at it, guys. It has given you a stop loss pips of just 1 moment. You from the open to this point, the stop loss pip now is now 42. You can now see is now 42.8. Something we started with 200 and something at the weekly time frame. Then we scale down to daily. You have 100 and something. But when you scale down to 4 hours, your stop loss is now 42. So if you continue to scale down, you continue to refine your order block. That is the essence of top-down analysis. So when we have scaled down to 2 hours now, this is our order block. All right, you have refined it again. You have refined it again. So the essence of refining another block is to reduce the your stop loss pips. All right, now it's now 32.2. All right, you can now see. All right, you can now see. Okay, after this 2 hours, if we now scale down to 1 hour, we are still going to refine. That is how you continue to refine it, but make sure the actual order block you are picking is the right order block that triggers the buy, all right, before price push to the upside, breaking structure. So you can see we are now on 1 hour. We have refined our order block. All right, is this small candle here? All you need to do, we have shaded it right from the weekly time frame. You can see we have shaded it, all right? So we'll now reduce our stop loss pips again. It's now 30, all right? So at this point, if you still want to go below, you click on 30 minutes, then you refine it, click on 15 minutes, refine it, and all you need to do is to place your pending order, because it's bullish, you place your buy limit order. Put your stop loss below this level, your take profit, that is your entry will be here. Your entry will be here. Your stop loss will be here. Then you now set your TP at the next resistance level. As simple as that. So that is how it is, guys. But as far as I am concerned, let's go back to 4 hours. That other block here, this other block that we chose now, that we've analyzed, is very far. Because we want money. We want quick money, not just quick money. We want price to tap into our area of interest quickly. So we don't need to go too far. All right, you can see this is the other block we've refined. This is the other block we refined. Is too far. So it's valid, but it's very, very far. You might wait for like 2 weeks, 3 weeks, even 1 month before price will come to that level. So all we need to do, we need to go back now to the weekly time frame. The weekly time frame. Let's go back to weekly time frame, guys. Now, I just showed you guys now how to do top-down analysis and how to single out another block and now refine it to your time frame where you will now place your entry. And as you refine it, as you scale down, the number of pips, the number of pips from the entry to your stop loss will be reducing. All right, will now be reducing. That is the essence of scaling down from the higher time frame. You have identified the other block. Now you will now be scaling down. As you scale down, the gap between your entry point and your stop loss peak, your stop loss level will now be small. All right. So from weekly point of view, we have singled out this point as what? As our support level, and we have singled out this point as our support level, and we also have another support level here. All right. So this one here is too far. So let's just put an eye on these 2, 1, 2 here. So we scale down to daily. All right. Let's do some adjustments. You cannot see. Let's do some online adjustment. What we notice here is price created after this push to the upside, it created a high pullback, created a low, which is support level. This push did not violate this high. It then means that it fails to create. So what now happens? It now push price to the downside. Here, you know how we do it. This place now, it has now become change of character or market shift. So guys, anytime I use the word change of character or market shift, is the same thing. It just means that it's a sign that price is, the trend is shifting from bullish state to become bearish. All right, so that is just what it means. All right, so at this point now we now discover that okay, this is the last breakout structure. Now it has given us a market shift. After this market shift, what happened? Price now started pushing back to the upside. So this leg now is what we are now going to study. Let's study this leg, because what caused the push to the upside after market shift is this other block here. There's another block. Remember I told you guys it can be a bearish candle, it can be a bullish candle. What is important is that the last candle before this push, before a volume, all right? That is what is important. So this is a daily order block. We'll say D1 OB. All right, we'll say D1 OB. So now we are going to be refining this. We are going to be watching this one, because we want in a situation whereby price will come back to this level, tap us in before it start pushing to the upside. All right. So, but now that price has given us a market shift, we are waiting for what? Violation of this place. If it fails, if price fails to violate this place, if it fails to go above this place, that is violation. If it fails to violate this place, this level, that means a bearish trend has finally occurred. So we should be expecting price to start pushing to the upside. And I remember telling you guys, once you see or notice that price creating equal highs or a double tops, it's a sign that price is reversing to become bearish. All right. Yes, it has given us a market shift here, change of character. Now it's rallying up again. Let's see whether it is going to violate this level. All right. If it fails to violate this resistance level, that means we'll be looking for opportunity to sell. But meanwhile, this is another block that caused this push to the upside. This is the other block, daily order block that causes push to the upside. Don't forget that there is also an FVG present here. So it makes it valid that in future, price will come back here to fill this gap. There's an FVG here. Once you see something like this, this is an A plus setup because price will surely come to fill this gap before it starts moving to where it wants to go. So we have identified this, the FVG, the order block. Now this is the market shift, and this is our last resistance. All right. So let's scale down to 4 hours. Yeah, we'll scale down to 4 hours. Then we will see the structure clearly. Now on the 4 hours, we now notice, okay, we notice on the 4 hour, it has given us change of character to the upside. Now we'll show you guys in a moment. This was our last, this on the daily time frame, this very one was our market shift. This was what gave us market shift. But on a 4 hour point of view, our market shift here, this was the last break of structure. Look at it. Our last break of structure happens here. Our last break of structure happens here. All right. And at the next push, price changing character here. Price change character right about here. Because this here is, there's a resistance here that caused this push to the downside. So we mark it here as what? Market shift. Then after this market shift, there was a pullback to this level, all right, before break of structure to the upside. So let's read this 4 hour structure. The push to the upside, okay, leaving this order block, giving us another block here. This is the other block that caused the push to the upside. What happens? Price has mitigated this very one. So let's put it mitigated. So it's no longer valid, just like something that has been used. This other block has been used. All right. There's a break of structure. This is another break of structure. All right. And if you look at this one here, I would say it's also a break of structure, even though it's very small. It looks like a liquidity grab here, but something like this, we scale down to lower time frame, we discover that this is a body. All right, so it's a break of structure to the upside. And after that, look at what happened. Price started pushing back to tap into this level before it mitigated it. And after that, it now pushed again to the upside. Now, after this one, there was a rejection here at the resistance level. It came in, tapped in here, then it now gave us another order block. Guys, this is how to do analysis for you to know where to position. This is another block, 4 hour order block, H4 OB. 4 hour order block. What you need to do, this white candle there, this bearish candle here, you shade from the top to the down. Let me remove this one. I can use this to do illustration for you guys so that you will know. Top from the beginning and the low. So this is the height. So all you need to do, carry this your tool here, shade it like this. All right. As far as I'm concerned, this is the nearest order block. Apart from this one is from daily. Don't forget, this is from daily, and we have the FVG present. And this very one is also from this 4-hour order block, and we have also FVG present. Oh, guys, let's see how far we can go on this analysis. It's not easy for somebody to just be talking. The best you can do is to appreciate that person. It's not easy. Right? All these things, why I spend money to acquire the knowledge, and I'm giving it for free. So, but I'm not bothered anyway. Then after this push, we have FVG here, and this is what? The 4-hour H4. Anyway, you see H4, you know that it's 4-hour time frame. The other block on 4-hour. Anyway, you see D1, that is daily time frame. There's the other block on daily time frame. The other block on daily time frame. All right, so that is how it is, guys. So if you want to now refine this one on this 4-hour, this other block on 4-hour, you now have to bring this thing down. This is the refinement we are talking about. You cannot see that it's not that wide again. This is, if you start from here to this point, this is the daily. But when you now want to refine it, because you are on the 4-hour, you have to bring it down to the beginning of this candle and where it ends. All right? So that is how it is. But why I prefer leaving it like this is because on the higher time frame, that is the daily, if price get to this level, once price tap to this level, it can turn from here and start going instead of coming down, coming inside it. It will just close this gap, because the idea is for it to come, close this gap, then push. Because as it's closing this gap, others are already here waiting for price. And as soon as price tapping, there will be a very massive push, and price will start pushing to the upside. So as a trader, we don't even have the patience to wait for price to come to our daily level, but we prefer to now scale down. All right, that is a problem of trading. Like I told anybody that is listening to me, that is learning from me, you need to wear a garment of patience as a trader. It's not all trades that you need to take, and it's not compulsory that you must trade every day. All you need to do, carry out analysis. Even sometimes in a week, you will not trade. All right, market is open, people are trading, but you see, what is going on, the activity is going on that time, that week, it does not correlate with your own strategy. So you cannot trade. All right, if it is not, if the movement of the market did not meet up with your own strategy, you don't have any trade. So you will not trade. Now that I've been able to refine this level now, if I want to set a pending order, I will set a pending order here, like this. This high will be my target. Then this point here will be my stop loss. I'll just set a pending order, finish. I don't need to do anything. I'll just be waiting until price come to tap me in. And if it tap me in and this level holds, I will be in profit. If it breaks this level, if the sellers are more than the buyer, they will push the price below this level. If it hit my stop loss, it's okay. I'll now be waiting. And also, okay, where is the next POI? When I say POI, I'm simply referring to point of interest. Okay, there's another order block here, which is the for daily order block. That means breaking this level, that means the sellers, they are trying to push the price so that the price will come and interact with the daily leg. So I will not be waiting patiently. As soon as the price gets here, once this level is broken, I will now set a pending order, waiting for price to get to this point. Once I set my pending order, these are pending orders. All right, buy limit order. All right, then sell limit order. Once I set my pending order, I will not do any other thing again. I will just be waiting for price to come to this level. Once it gets to this level, tap me in, I will start making my money. That is just it. Not that you are just running. If you see price going up and you'll be following it, you'll be rushing. You want to follow it. No. If it's going down, you want to rush. No. You have to look for a place and wait for price to come to you. Where are the places you need to wait? Identify your order block, refine it to the point, to the time frame you use in your entry. Like me, I'm comfortable using 4 hours. I don't go below 1 hour to place my trade. If you are the type that use 15 minutes, it's okay, or 30 minutes. All you need to do from the higher time frame, all right, single out the order block, all right, or the support and resistance level, then refine it. Once you mark it from the higher time frame, scale down to your entry time frame. You know, okay, you know where that level is coming from. You wait for price there. Price, you put your pending order. Or if you're the type that you sit in the front of your chart every day, you don't have any other job, it's fine. You don't need to set pending order. You go check your system and see where price has gotten to. And once you notice that price, well, you can even set an alarm, because once price gets close to your level, it will alert you that price is approaching your POI, that is your point of interest. Then you will now go and place your pending order, or once it finally get to the level, you use instant execution. You just click buy at that point. Your broker will take you in. All right, you just set your stop loss and your target. Finish. That is all. That is all, guys. So at this point, I'm having headache already, man. To teach is not easy. And that is why people are charging big. All right? So this POI order block is valid. So we are just going to leave it pending because it's still far. It will take time before price will get to this point. That is what it means. All right, price is not getting to this level anytime soon. All right, this is the 4 hours here. All right, this is the next point, and there's AVG present here. So this is the area we are going to focus on. All right, we'll place as it is now. Okay, we can scale down to 2 hours to refine this thing again. I can even see another POI. All right, I can see another POI. That is why I don't like scaling down too much. If you go to 2 hours, you discover that this very point here is a POI. This is what caused this push to the upside. And if you look at it very well, you discover that, if you look at it very well, you discover this one is 2 hours. H2 OB. If you look at it very well, you discover that after this push, there was a gap and price is coming back. After the push, there was a gap and there was a break of structure. And price is gradually pushing back, retracing back to close the gap. To close the gap. So all we need to do, let's refine, because if you look at it, there's an FVG, but it's closing, gradually closing the FVG. You can see it's gradually closing the FVG. You can see it's closing the FVG. All right. Now all we need to do now is to now scale down. All right. All right. Let me put this so that we can see it. Guys, we are still on one. Eh? How many this thing are we able to can we analyze today? I want to do my own personal analysis. 10 minutes, I'm done. 10 minutes. So we scale down. Let's refine it because we are on 1 hour. Refine it like this. Okay. So we see whether price we get to this point and react. If price tap in, then do like this and push to the upside, good. All right, so we have been able to identify another order block on H2. All right, from the H2, that is 2 hours, and we have refined it to our 1 hour. We have refined it to our 1 hour. So as far as this point is concerned, you just place your entry here, your pending order. Price is supposed to give us a new high, then we like this. Okay, it's 2:1 is still a good estimate. As far as I'm concerned, if price we have to push to the upside, we are going to target this high. All right, we'll target this high. Target this high. But once price gets to this point, we're going to take partial because this is a reversal point. It's a reversal point, this level. It's a reversal point. All right. This is a reversal point here. All right. It's a reversal point. So let's see if this place will hold, but I like extreme. I like waiting for price at the extreme. All right. Because why this point here has been tested multiple times and it's a strong support level. So if price come back to this point, there's every tendency that is going to push, that is going to still respond, you know. There's every tendency that once price get to this point, that is going to start pushing to the upside. So this is what caused the whole push to the upside. This where it originated from. Just like here was the origin of this push to the upside. All right. I hope you guys are following. All right. So So these very points here, this is the first opportunity. If you don't want to enter from here, you wait until price gets to this other block here. Wait until price gets to this other block here. All right? Wait until price gets to this other block. Wait until price gets to this other block, then start pushing to the outside. So the coordinates so the coordinates for this, let's drop the coordinates. Here is the entry, 1.15933. Stop loss 1.5712. Okay, let's drop the coordinates. Coordinates. Buy limits. Order. Your ET, that is your entry, 1.15930. 1.15930. Your SL, that is stop loss, 1.5706. 1.15706. Then your TP, that is your take profit. That is your take profit. We're going to take it all the way down, all the way up here. That is 1.17124. 1.17124. But meanwhile, this level here, all right, where this reaction happens, all right, once you are in profit and you push up to this level, you have to take partial because here is a stumbling block, price can reverse from here. But once we are approaching this level, you take partial, all right? Take partial, take some of your profit. That is how we take partial. I'm still going to teach you guys on how to take a partial. All you need to do is click on your order, then you click modify. If you are using, for example, if you are using one lot size, that is 1.00, you can scale it down to 0.5. You have taken half. We are using 0.5 because you can scale it down to half, 0.25. All right, so it's like that. That is how to, once you reduce your, once you reduce your, what do you call it now? Once you reduce your, so many things on my head at the same time, man. Once you reduce your lot size, all right? Once you reduce your lot size, then it will give you an avenue for you to say sell, because you are buying, you are going, the price is increasing, you are supposed to sell. You sell here, then the other one will still be running. So that is how to take partial. All right, that is how to take partial. Okay, I will still make video on it. All right, once as the course that I'm giving out is progressing, then I will still make video on how to take partial. So guys, you don't worry. So for this very one here, I told you guys, once we get to this point, all right, where it's expected that we take partials here, because here is a stumbling block here. All right, so if we enter from here, let me drop the coordinate for this very one here. Let's clone this, then modify it. The coordinate for this entry point here is 1.16634. 1.16634. Just hold on, guys. Let me put on light. Moment. On 1.16634. That is the entry. Then the stop loss here is the stop loss is 1.16502. 1.16502. Then TP is the same level. TP will be the same level. All right. But we're expecting price to give us a new high. So we'll be targeting this point. We should be targeting this point. Why? Because this is the highest high here. All right. We're expecting price to give us another high, taking out this level. Or we are still going to play safe, and let's take our profit here. Let's take our profit right here. That is 1.17090. 1.17090. Take our profit there. All right. So this is the This is the coordinate for this, and this is the coordinate for this. All right, this one is still pending. We are looking out for this. This is where we see the first reaction, and this will not determine how this will play out. All right, like I said, this is a buy limit order. All right, if you want to scale down, if you're not comfortable taking your trade on 1 hour time frame, you can scale to 30 minutes, you can scale to 15 minutes. You already know the level. So that is what is important. It's not as if you just jump blindly to 15 minutes and start choosing other block. That is what you should not do. Go to the higher time frame and select the other block. Identify the other block, then mark it. Then you can now start refining it down. All right. So that is how to do top-down analysis. So that being said, I hope this is clear. We are done with EURUSD. It's not everybody that trades US 50, US 500. Let's go to, let's take gold, XAUUSD. That is gold, XAUUSD. Like I told you guys, as a beginner, you just stick to one. All right, you don't need to start trading all the pairs. All right, you can see what we did last week. What we did last week, this other block is still valid. Price has not come to it, and you can see this is the high, is pushing to this high. It's pushing, price is pushing to this high. You can see, all right? It's just pushing. Then the next, since all those POIs did not, they are still pending. This one is pending. This other one is pending. We did not get tapped in. We didn't get tapped in last week. So that is how trading is. That means on gold, we did not have any trade. So that is how it is. So price broke structure here. You see, where is the price reacting to? Reacting to this other block. You see, that is trading for you. It's reacting to this other block. After it tapped in, you see, it just tapped in, then it started pushing. All right, if we had, okay, look at it. Okay, this one is 20th of August, all right? Like now, after this, it started pushing and it has been pushing. So this very one here, this is the other block for D1, starting from here up to this level. What happened? Price tapped in and it started blowing to the upside, breaking this structure here. We need to clear all this so that we understand. All right, so you see, this is the other block for, this is the daily order block. You see how price tapped in and it started pushing to the outside. D1 will be, you see, you mark the high of this candle to the low of the candle. you know, push, you shade it to your right. You see? Price created this high and pull back to this support level, interacting with this other block. You know why? The aim was to close this gap, this fair value gap. It has closed it. Then immediately it tapped in. All right. It now started pushing to the upside. Now it has given us a break of structure here. It has given us a break of structure here. So the other thing is that trading is patient. I'm telling you, if you want to be operating on the lower time frame, you lose your money. Before you start operating on the lower time frame, make sure all your marking, all right, all your levels come from the higher time frame. I will not say it again. And now you can now see, if you move to high weekly, you see the weekly has been violated as well. The weekly level has been violated. So let's go. Push them to 4 hours. From 4 hours, this one now has already been mitigated. This has been mitigated. So price is not coming anymore. Now, what we have left is this after this break of structure to the upside, price retrace, giving us another opportunity here. This another opportunity. Because big boys will always leave a fingerprint. All right? A fingerprint or a blueprint, whichever you choose, you prefer calling it. The big boys in the market, this is H4 OB. The H4 OB, once they step into the market, they always leave a footprint, just like here, push, all right? Here, they push, came back, interacted with this, push, giving us this opportunity. We're waiting for price to come back so that we can join them. That is just how it works. And why? Because this is the last break of structure. This is the last break of structure. On this, I'm going to be very fast, guys, so that we'll just get this done faster, and that's all. Last break of structure. So if you want to now scale down, go to 2 hours. Here is it. All right, you refine it a little. Refine it. All right. If you want to refine it, now bring it down to this very one here. But the danger is that on 4H, once it gets to this level, what is the danger? I'm just going to tell you guys. Me, I don't go below 4 hours. And even if I want to go below 4 hours, I to take I will just leave it, because this is from the 4 hours, this is a level. If you scale down to 2 hours, you see, you will now refine it, because why you are refining it is because you want your stop loss pips to be small. All right? If you do it like this now, your stop loss pips will now be small. All right? But if you are putting it here, if you still stay on this 4 hour level, your stop loss pips will be a little bigger. That is just the difference. But in trading, it is advisable you give your trade room to breathe. All right, give your trade room to breathe. All right, another way to manage the differences on the stop loss is that once you first of all identify the distance between your entry to your stop loss, once you check if the stop loss pips is, let's say for example, 20 pips on a 4 hours, then deal with it using your lot size. Reduce your lot size to suit your trading rules. All right? But if you're on lower time frame, let's say for example, you're on lower time frame. All right? You're on lower time frame, you refine your order block to lower time frame, and instead of 40 pips, it's now 20 pips, or instead of 20 pips, it's now 10 pips. All right? You'll be happy. It's okay. But the point here is that if if price action just push and just tap on the higher time frame, it can reverse from there and start pushing up. All right, you will not say, oh, it did not tap me in. It is because on the higher time frame, big boys, they already set their pending orders on the higher time frame. You are on the lower time frame, price will not get there. But that does not mean that sometimes price will not get it. Price will get there, but most times from the higher time frame, price will just get to the higher time frame, tap in there, and then move and start going. So another the thing I'm trying to say, the point I'm trying to make is that even though, because we are advocating that trading on higher time frame is better, why most people are running from it is because of the stop loss gap, the pips. All right? Let me give you an example. We are on 4 hours, right? This is the, what do you call it? This is the order block from here to this point. So if I want to set my, if I pick my buy tool here and I want to place my pending order, I will play the open. Then below this level, what is my pips? My pip will now be 12.37. All right, that is the stop loss from my entry here. From my entry here, this is the stop loss. I will put my stop loss here. All right. Now, let me put this one here so that we will see it. Then this level between this point and this point is 12.37 pips. Let's say 12 pips, guys. Okay. Now, if you now scale down to 1 hour, let's scale down to 1 hour. We have scaled down to 1 hour now. All right. You now see the difference. We have scaled down to 1 hour. All you need to now do is for you to now adjust this thing here, is for you to refine it. You not refine it because this is the other block. Now I want to set my pending order. I want to drag this one down to this point. If I'm leaving it the same level of where the stop loss will stop, now what happened? What did I get? 6.63 pips. Just let's say 6 pips against this very one, against 12 pips. So it's half of it. Do you understand? Now, there's another way to deal, but now from here now, if you now move scale down to 15 minutes or 30 minutes again, you will now reduce it. The refinement will reduce your stop loss pips. That is the idea. All right. But don't be surprised that price action will get to this level, the 4 hour, tap and start going. It will not come down to this 15 minutes. It will not come down to this 1 hour. Most times, price does that because it's the higher time frame that decide what happened. And the banks and the financial institution, when they want to place order, when they want to place their pending order, they don't go below 4 hours, 1 hour, and all that. They don't come to 30 minutes. They don't come to 15 minutes. They don't. All right. So what you need to do is that instead of running to lower time frame, let's say, for example, this 4 hour time frame. All right. the other block here, what the price, the stop loss pips here is what? Let's say 12.45. All right, let's say 12.25. What you now need to do is for you, instead of using 0.5 lot, instead of using 0.5 lot, you can cut it into 2 and use 0.25 lot. Do you understand what I'm saying? You can use 0.25 lot, or instead of using one lot size, you using one lot size, but because you now have the stop loss pip as 12, all right, and you want to trade on 4 hours, instead of using one lot size, use 0.5. That is half of that one lot. Do you understand? And by the time you now discover that the price has tapped you in, all right, price has tapped you in and is going. Once you get to a level, there will be a pullback. Once you start pushing again, at this point, you can add another 0.5. All right, after the pullback, and you now see that there is a sign that there is still momentum that this push will still go. Add another 0.5, making one lot now. All right, that is what we call stacking in trading. That one is a little advanced, but that is how you can deal with it. All right, so it's like that. So as far as I'm concerned, guys, look at it very well. This level here, this is the other block. All right, this is the other block, and we are going to take put our coordinates so that and we have LVG here. Remember, LVG is the distance between this last candle and this upper candle, the high of this candle and the low of this other candle. This previous candle, after this big candle, the upper candle, the low of it, that is what gives you LVG, fair value gap, or imbalance. So we now see that there's an LVG here for price to come back and close up. So our entry point is base. Our entry point is 3.415. There's the coordinates. Buy limit order. That is E or EP or EP. That is entry point, entry price, sorry. Or entry price would be 34.15.93. 34.15.93. That's our entry point. Then our SL stop loss that is 3404.33. Is that correct? 3404.33. Okay, it's correct. Then TP, our TP, our take profit now is it should be pending. Pending in the sense that we want to see a pullback because price has not started giving us a pullback, but we know that sellers are in the market already because of this rejection. Well, let's look at it. Let's scale down and see whether, okay, it has started giving us a pullback. Move to 2 hours, you see that it has started giving us a pullback. So with this, we can confidently say that this point here, this is the turning point. So let's go to 4 hours. This is the turning point. You can see, looking at this point, you will know that, okay, sellers are in the market. If you scale down, you now discover that, yes, it's already reflecting. So our TP would be 345437. Okay. This is the coordinate for this. There's a coordinate. So one thing you must know, you must do is apply proper risk management, guys. It's very, very important. Proper risk management. Apply proper risk management is a key. All right. Don't just go and set your penny order and put a big stop loss, a big, what do you call it? Don't go and open a big position because you just want to blow once. No, you don't trade like that. One thing you must put at the back of your mind, first thing is to protect your capital. Protect your capital, because once you lose your capital, you are out of business. Once you lose your capital, you are out of business. All right. So you set your buy limit order, or if you're the type that sits in front of your system every day, you can wait, or you set an alarm here. Once price action is coming towards your POI, it will alert you. All right. Then you now go and place your order. So that is how it is, guys. So we're expecting price to come here, then we'll see the reaction, no? Okay, so that is how it is. Then which other one should we analyze? Okay. Then in the next one, let's UJ. Like I told you guys, if you have any pairs that you want us to analyze, always drop it at the comment section. USDJPY. Let's analyze UJ. I think that should be the last one because I'm having headache already. Having headache already. This thing is not easy. Just the talking. So from a weekly point of view, you can see price going up, but when price got here, it maintains this level as a support level. All right. So here, breakout structure. And the last breakout structure. And you can see also this one here was a breakout structure. Like I told you guys, as far as trading is concerned, you don't underestimate every little thing like this counts. All right, it counts. So after this pullback, this other block here, price gave us another block here, but it has been mitigated. Price came here and see the reaction from here. So let's go to daily. Push like this, price going up, but fail to still here. You can see here, this is the last breakout structure. To the downside, right? Last breakout structure to the downside, look at it, and price just narrowing and it stops here. So this one is really a rough movement, and there is no headway. There is no this level here. This is a resistance level. Price tapped in and they started pushing to the downside. It's a resistance level. So let's scale down. We've not really seen any important thing here. Okay. Then we have another block here. We have another block here. And also we have another block here. All right. Price is a POI. We're having a POI here. And also there's a POI here. The POI here. On 4 hours, there's a POI here. Which will be. And this too H4 OB. So if price tap here, let's see whether it will drop. Stop shy. If you come here, let's see whether price will drop. All right. Or if it breaks above this, gets to this point, let's see if price will drop, because there's a resistance here. Price has tested this point and it has tested drop. So if it comes back, it's most likely that it's going to drop. So the closest point here, the opportunity we have right now is this level. But if you want to stick to the extreme, where the extreme here where the move originated from, it's better we stick to this. All right, we stick to this. Once price gets here, it is expected that price should drop. All right, so we're going to take this trade. I'm going to take this trade. We should be looking for a sell. We'll be looking for a sell. We're looking for a sell. All right. Prefer to stick to the extreme, but this is another POI. All right. So if we wait for price, once price gets here, set your alarm, price gets here, and watch the action. If it's going to sell, then we join it. But I prefer to stick to the extreme. All right. The extreme is better. And because anything that makes price to push above this whole level will be used as liquidity. This whole level will now be used as liquidity to fast track the movement to this point, tap into this POI, and then price will now drop. So we don't need to be in a hurry to take trade. If you take quality trade, even if it's one trade in a week, you are fine. All right. So this one, as far as I'm concerned, I'm going to leave it because why? Because when price got to this point, it pushed to the downside. It did not break this level. It retraced as it's pushing again. It's supposed to push. It created the resistance, right? See why I said this is the reason why I said I don't trust this level. Number one, he created there's a POI here that dished out a sell. Fine. But did it create a low? Yes, it created a low. If you look at this level, it gave a low. But after this retracement, it created a resistance here. Now it is expected that this push should create another lower low. But it did not. It stopped shy here. You see? It stopped shy here. All right. When you now look at it, you discover that it has created equal low. All right. It has created equal low. That means as price is pushing back to the upside, because this guy failed to give us a lower price, then this guy here would not be used as a liquidity because he did not do his job. And once, because people are already here, others are already here, and once this price managed to break this level, with that fuel, with that momentum, he will break this level to tap into this PI before it comes back. So I rather wait for price to get to this POI. But if you look at it very well, you discover that the origin is here. This is what initiated all this move. The origin is here. So price should go back and tap into the origin before it starts selling properly. All right, so as far as I'm concerned, I will just wait. All right, wait for price to get here. All right, wait for price to get here before I wait for price to get to that level. All right, Wait for price to get to that level. Wait for price to get to that level. All right. But we need to open our eyes, because if it breaks, that means bullish trend has resumed back. All right. If it breaks this level, that means the bullish trend has resumed back. All right. So just that is how it is. All right. That is how it is. There's an AVG present, a B AVG present. All right. Price will come back and close up this point. All right. So that is how it is, guys. The coordinate for this, we are going to use a very tight stop loss. We don't want to mess up. I'm going to use a very tight stop loss. So even if it triggers and not get to this point, you should know that, okay, you are not risking much and you just be out of the trade without any hazard. All right. We are just going to this one here. This is the entry 151.185. Then the stop loss, the entry is 150.68.1. Then the stop loss is 151.185. All right. This week I'm not going to be trading it. So if you trade a USDJPY, this is the entry. Then your TP should be here. All right. The TP should be at the turning point here. Turning point. Like this. The TP should be here. Or let's put it at this turning point here instead of turning point here. So your TP will be 146.660. Your entry, okay, let me put the coordinates for those who are trading. Coordinates. This one now will now be sell limit order. All right, sell limit order. Entry point 150.692. 150.692. Then stop loss, that is the SL. XL will be 151.185. 151.185. Then TP, your TP 146.640. 146.640. All right, 146.640. So this is okay. This is it, guys. If you can look out for this, because this is a valid POI. All right. If price get to this point and see a reaction, you can use instant execution to join the price to push the price down. All right. But as far as I'm concerned, if the best thing is, I always want to protect my capital. So therefore, this level, because of this move, I'm just being skeptical about this level. But whatever happens, set your alarm here. Your alert, like this, is very simple. Alert. Okay, like this, the alert is set. As soon as price approaches this level, it will give you an alert so that you come and watch the price and see what happens. If you break above, forget it. Allow, you know that the next POI is this one. All right. So thank you guys. I'm heavy-headed, man. Thank you guys so much, and God bless you all. On this note, I wish you guys a blessed week ahead, and bye for now. Don't forget to subscribe to my YouTube channel. Please subscribe, share it, and like my video. Drop a comment on the comment section. God bless you.